Good morning. Here is your Executive Intelligence Summary for Friday, March 13, 2026.
Here's our operational roadmap for today's briefing. We're going to start with the lead story, which is India's massive energy shock. Then we'll cover the macro and governance updates, move into corporate intelligence, touch on what the editorial pages are saying, and we'll finish up with the closing market numbers. Let's begin.
All right, starting with our lead story. India is grappling with a major energy shock, and the domestic fallout is pretty significant. Let's break it down.
So the conflict in West Asia is really starting to hit home, and it's dominating the national conversation. You have the government and parliament giving assurances that fuel supplies are, stable. But the immediate crisis, the one people are feeling right now, is cooking gas. We're talking about trying to secure supply for over 330 million households, as rumors of scarcity are starting to lead to some panic buying.
Now, to really understand the scale of what's happening, you just have to look at this number. Every single day, 14 million barrels of crude oil pass through the Strait of Hormuz. It's an absolutely critical artery for the global energy market. And right now, that flow has been completely choked off. The global impact of that is just huge.
And this is the number that has everyone worried. Brent crude has already blown past $100 a barrel. But the forecasts, they're alarming. We could be looking at $150 very soon. And if this crisis really drags on, some analysts are talking about a staggering $200 a barrel. A price like that would send shockwaves to the entire economy, affecting everything from your daily commute to the price of food.
So how is the government responding? Well, the policy reaction has been pretty swift. To protect those households we talked about, oil companies are now redirecting 20% of their commercial LPG supply. For businesses, especially in the hospitality sector, states are being told to allow alternative fuels like biomass for a month, and to help the most vulnerable, an extra 48,000 kiloliters of kerosene are being released. These are clearly emergency measures, trying to stabilize a very volatile situation.
So the bottom line here is that the strategic fallout is now being felt pretty much everywhere. Diplomatically, India is at the UN Security Council co-sponsoring a resolution to protect shipping lanes. Economically, inflation's on the rise, and the rupee just hit a record low. And in the financial markets, we're seeing serious volatility that's already messing with bond sales and could put major IPOs on ice. The big takeaway is clear. The Indian economy is facing a major stress test.
Now, of course, this energy crisis isn't happening in a vacuum. So let's zoom out a bit in our second section and look at the broader macro and governance picture. We have 3 updates here.
First, on the domestic front, political tensions are ratcheting up in West Bengal. This follows President Murmu's visit, where she publicly complained about protocol lapses. The Trinamool Congress government then tried to get an appointment for state officials to meet with her, but that request was denied, which just escalated the friction between the state and the central government.
Next, let's talk about India's diplomacy. It is an incredibly delicate balancing act right now. New Delhi is backing the UN on freedom of navigation, but at the same time, it's stressing the need to protect the 10 million Indians living and working in the Gulf. And remember, the region supplies half of India's crude and 90% of its LPG. So the government has adopted this very careful, very neutral position. It's a real diplomatic tightrope walk.
And on the economy, we were already seeing some worrying signs on inflation. Now get this, even before the full impact of this oil shock hit the numbers, retail inflation in February had already climbed to a 10-month high of 3.21%. What this means is the economy was already running a little hot before this external shock, which just makes it that much more vulnerable to the price pressures that are on the way.
Okay, with energy prices and inflation on the rise, it's really no surprise that we're seeing some pretty direct impacts on the corporate sector. Let's dive into that.
First up, equities. The markets have seen a pretty significant correction. The Sensex hit a high of over 85,000 back in January, and now it's fallen below 77,000. It's being pressured by crude prices and foreign investors heading for the exits. But the big question analysts are asking is whether this sell-off has gone far enough, because a lot of stocks still seem to be trading at pretty high valuations.
Over in the debt markets, things have gotten very cautious. March is usually a really busy month for companies raising money through bonds. But we've seen a sharp slowdown because higher yields just make borrowing more expensive. Big issuers like NABARD and REC have already pulled or completely scrapped their bond plans, and bankers are warning that more deals could be put on hold if this volatility keeps up.
So all of this leads to the big question for the IPO market. These huge offerings like the National Stock Exchange's IPO, they're still moving forward, but the general feeling in the market has definitely weakened.
With the main indices down and listing day gains for new companies at their lowest point since 2019, it's very possible the IPO market could slow down quite a bit unless we see some stability return.
And in other corporate news, there's been a really interesting, though subtle, shift in foreign investment rules. The government has slightly eased restrictions on investment from neighboring countries, which is widely seen as a move aimed at China-linked capital. So basically, as this chart shows, if an investor from a border country has less than 10% beneficial ownership, they can now invest more easily. It's a small change for sure, but it is a notable shift in policy.
So that's the news. Now let's turn to the analysis. In our fourth section, we're looking at what some of the key editorial pages are saying about all this.
First, the Hindu's editorial board is weighing in on the Supreme Court's reaction to some textbook passages that discussed judicial corruption. Their core argument is that the court's intervention, while maybe well-intentioned, risks looking like institutional overreach, and as they put it, such defensiveness harms public confidence more than the textbook passage itself.
Next, writing in Mint, M. Madhavan, has a crucial warning about this oil crisis. He's arguing that strategic oil reserves are not the magic bullet that some people might think they are. Global markets need a constant, daily flow of oil, not just a one-time injection from storage. His take is that reserve releases may soften the blow, but they do not eliminate the risk of a prolonged price shock.
And that brings us to our final section, a snapshot of how all these events played out in the markets today. Here are the closing verified numbers.
For Friday, March 13th, the Sensex closed down 829 points at 76,034. The Nifty fell 227 points. The rupee continued to weaken, hitting 92.25 against the dollar, and Brent crude shot up nearly $4 to settle at $96.60 a barrel. It was a really volatile day, driven by that energy shock, and that's going to continue to be the main story for the foreseeable future. Thanks for joining us.